And you can see we are green. NASDAQ's leading the way today in what has been, as we say, a great quarter for stocks. Dow up 12%, S&P up 14, NASDAQ up near 20, the Russell 2000 up a little more than 20. What does it mean for, if anything, for what you think the second half might hold?
I think you forgot the most important statistic, and that's momentum's up greater than 40%.
That's on track for its best quarter ever.
That is.
I was going to bring that up next.
That is my compass for 2026 and for the second half of the year.
I run a strategy first before I went to you.
I run a strategy that's 50% quality, 50% momentum. I'm asking myself the question, and I'll address it in the second half of the year. Does that relationship need to change? Does it need to be more weighted towards momentum than quality? Because, in fact, so far year to date, that's been the case. I think momentum is your guide. I think if you're looking at the S&P equal weight, S&P market cap, and you're trying to pick a winner, I think that's a foolish endeavor. Each of those indexes are rewarding you so far year to date. It's vacillating between which one steps forward and takes the leadership. It's been about semiconductors for sure. Software has struggled, but there are areas of software that have worked, like Datadog.
Hang on 2 seconds. Let's do, so we got the broader view of momentum for the quarter, which, as we said, is best quarter ever. But throw up now a 1 month for the MTUM, because I feel like this is a pretty good debate to have on what you think is going to happen in the second half, because we've been questioning what momentum. Look at that, a little more choppy, a little more volatile. Leaves the open question of, is it going to be a momentum-led market in the second half or not? I think, man, that matters a lot for people's investment strategies over the next handful of months.
So I still believe that it will be. I think a lot of the reasoning why momentum has trailed in the month of June is related to the Mag 7. Keep in mind, you're looking at the Mag 7 for the month of June. Each one of those is down. But yet collectively, when you look at them on the year, only Meta is really the name that's down. Alphabet, NVIDIA, Apple, all rivaling the performance that we're seeing in S&P.
They're all down over 1 month.
1 month.
It mirrors what we're seeing here.
Correct. That's the reasoning.
An unraveling or unwinding of momentum.
Or maybe
in some respects.
Or maybe just a
questioning of.
Maybe a correction that kind of alleviates some of the extreme bullishness and positioning.
Okay. What do you think?
Well, I think all those trends of the stocks that we're showing right now are clearly to the downside over the last month. That's clear. But there's also a lot of jinx up and down. And we've talked a lot on the show the last few days about how the rotations have come fast and furious. I think those rotations are going to continue as the month of July unfolds. So instead of trying to time those rotations, and Joe, you and I were talking about this yesterday, let's not try to time those rotations. I'm going to go with what fundamentally makes sense to me, which is a broadening of the rally on the back of a broadening of earnings, which is what's projected. The rest of the market is projected to catch up with technology. Chips will still do fabulously.
They're not going to catch up.
That's actually what's projected. If you look at the 493,
we're not looking at 50% earnings growth from those other companies.
If you look at projected earnings, third quarter, fourth quarter. I'm getting this from Strategas. I can send you the actual data during the break.
Well, I'm just saying you're not going to get 50% earnings growth outside of tech.
Well, tech is coming down. Tech is coming down. Remember that 40%. It was 40% in the first quarter. Remember that. And of that 40%,
you're not getting 40% earnings growth from the others.
I know, but just hang on a second, because two things are not pull out energy, pull out the paper gains on Anthropic and OpenAI from tech. You've got 25% growth. That's what technology operating earnings growth was in the first quarter. Now, if you look at projected for the other 493, and Scott, I'll send you the graph right after this, okay? But the projected earnings growth for the other 493 in 3Q and 4Q.
Get those guys on the phone.
Okay. I mean, Chris Verrone's pretty terrific on this stuff. And I know you know him and you talk to him. Look, it's projected to catch up and then exceed. That's what the projections are. Yes. I'll send you the data.
Okay. It's not.
So do it right now.
Do it right now.
I will.
Do it right now. Before you guzzle the water, do it right now. This is where the anxiety starts to grow.
Chris, are you listening? Email me the chart for crying out loud.
Starts to build.
I see it.
He's pounding like 2 or 3 waters. He's got 3.
Hit the third.
Jason, go ahead.
Hit the third in 5 minutes. So I think we'll see more of the same in the second half. I think
more of the same. What does that mean?
More of the same, meaning that I think momentum will continue to have energy and juice.
Okay.
But I think the broadening of trade will continue to have some life as well. And I think Joe and Jimmy, I think you're right in that. You don't need to pick either one, right? We don't need to pick momentum. We don't need to pick the kind of the value centric or healthcare or financial. I think Earnings will be positive. Of course, we're seeing earnings estimates continue to rise. We're looking at 24% this quarter. Clearly, semiconductors have been most of that run. NVIDIA and Micron will be 40% of that number. So I will be paying attention to that. But I continue to like some of the areas that have been somewhat left behind. We see a little bit of a spike in healthcare, which is interesting to me. I think IB, investment banking, which I know we'll talk about later, is also an interesting story for me. So I'm looking to broaden out my exposure in the second half.
Josh, so where does the momentum take us in the second half? Semis are on track for their best quarter ever. Some suggest they haven't reached the peak. So this cycle, and if that's the case, and it turns out to be true, then momentum still has good days ahead.
Well, first, let's start with the top 10 stocks within momentum. And what you'll find is that 9 of them are all, 8 out of the 10 are all trading based on the same theme, which is the data center capex build. It's Micron, it's Intel, AMD, Caterpillar, Broadcom, Lam Research, AMAT, GE Vernova. That's your 8. Every single one of those stocks is rising and falling based on every breathless pronouncement from Meta, Microsoft, Amazon, and Alphabet about how much money they will or won't spend next quarter, end of year, next year. It's all one trade, and it's sort of undeniable that that's what's driving the market. The only 2 in that MTUM top 10 by weight, J&J and what's the other one? Exxon. First of all, I don't even know if those stocks will still be in it the next time it rebalances. They might just add 2 more AI capex stocks. We might just have effectively one bull market powering 5 sectors and every other stock sort of doing very little. That's what this market is. I actually asked for this chart to be built so people have the context on what's working this year, so I can answer your question.
Okay.
Fire that thing up. What I'm showing you guys here is the chart of the year. If somebody said, Josh, explain the U.S. stock market first half of the year, I only need to show you this one chart. What you can see is that the equal weight tech or RSPT ETF, this is a thing that would own Flextronics or Flex Limited, they call it now, and Ciena and every other component supplier or vendor to the capex build out. And of course, Micron's in here, et cetera, et cetera. That's up 41% year to date, and we're only 6 months in. That is insanity. The XLK is not far behind, but on a percentage basis, 31 versus 41 is a material difference. And then I'm showing you the Mag 7 at the bottom of the pane, which is actually on an equal weighted basis, those stocks are negative. They're actually detracting from the performance of the S&P, and they look like they're on another planet from what's actually working in tech land. And that is the chart of the year, because remember how we came into this year, people complaining, it's all ETF flows, it's concentrated, we've never had a bull market sustain itself with only 7 stocks going up. All of the reasons why people told you not to invest, or why we were quote unquote long in the tooth. And the idea was that as go the top 7 stocks in the index, so goes the rest of the market. And it turned out to be the opposite. They sold these stocks all year because these are the companies doing the spending, cutting the checks, and they went into the companies that are on the receiving end of the checks. And that is the story of this year. So to answer your question, what do we think for the second half? Well, tell me, are the check writers about to all of a sudden stop writing checks? I don't think so. It doesn't seem that way. And a lot of the capex plans that they've already been spending money on are the types of things that you can't just stop, because then you're throwing everything that you've already done in the garbage. So if you think that all of a sudden something's going to reverse the earnings growth that's powering that equal weight tech index, okay, tell me what it is. I'm all ears. If you don't think so, it's very hard for me to envision a scenario where we don't get follow through. The best case scenario, and I laid this out over the weekend, the best case scenario now is that the S&P 493, when they start reporting earnings this July, start talking positively about the ROI of all this money they're spending with Anthropic. and Palantir and OpenAI and Gemini, they start saying things like, yes, we actually think earnings will be up for the rest of this year because of these AI investments that we've already made and continue to make. If we get that kind of commentary in the July earnings season, look out above, and there are a lot of stocks that can join the momentum list rather than just sit there and watch everyone else have all the fun.